All right, guys, Steve Penny here with a guest post on Jake's I Love Prosperity channel. The plan going forward is to give a weekly market update covering silver, uranium, and gold each Friday. And as long as you guys find value, we'll do this each and every week. So let us know what you think in the comments down below. Also, if you haven't subscribed to this channel, I would encourage you to do so. So subscribing and hitting those like buttons helps Jake to grow his channel and for us to reach more people and get the message out to more people. I'll also mention that I do have a free weekly e-letter that goes out every Sunday. It's totally free, and the goal is to provide tons of value every Sunday afternoon. And the way to get that is at silverchartistreport.com, or you can simply click that link down below and get your copy this Sunday. I'll also mention that this channel is sponsored by Vizsla Silver, an up-and-coming silver exploration company with mines in Mexico. So with that said, let's go ahead and open up some charts. So I always like to begin my chart reviews with a look at the US dollar, as it can give us an indication as to whether the commodities, silver, gold, and uranium are facing headwinds or tailwinds. So when I pull up a daily chart of the US dollar, what I see is a series of lower highs and lower lows dating back to early 2020, and that's the definition of a downtrend. However, you could make a case that we're seeing a little bottoming pattern here that could see the dollar rally up towards this declining 200-day moving average. Now, if that were to happen, we could see a little bit more sideways consolidation in the precious metal sector, or even a little bit of near-term weakness. However, I think a more likely scenario would be a resumption of the downtrend channel, and the big levels to watch would be $89.21, followed by $88.25. $88.25 was the 2018 major low in the dollar, and once that is taken out to the downside, I think that will coincide with a resumption of the major uptrend in silver, gold, and the commodity complex as a whole. What's interesting about this chart is you can see this little bowl pattern right here is nearly identical to the bowl pattern that we saw back in August of 2020, where RSI was deeply oversold. And you can see RSI got deeply oversold here. We had this identical bowl pattern, had a false breakout, and then we resumed the downtrend. Let's see if this pattern follows suit. Now we'll move on and take a look at a 10-year chart for gold. And what we see here is a very bullish pattern. And prices pulled all the way back to this $1,767 to $1,800 major support level. And now I have a question for most people. Most people back in August, when gold was up near $2,089, they would have easily said, "Oh, I would love the opportunity to buy back down at $1,800." But buying the dip, or excuse me, saying you want to buy the dip is much more difficult than actually buying the dip, right? It's just natural human emotions. I struggle with that myself. But I do believe that gold is at a very attractive entry point here. Even if there is just a little bit more downside risk, the upside potential is enormous relative to the downside risk, in my opinion. Zooming in on the daily chart here for gold, the key level to watch on the downside is 1767. That was the low marked on 30 November right here, and we're hovering just above that line right here. We don't want to see a weekly close below that 1767 level, as that could signal that we need just a bit more time to consolidate. However, conversely, if we do see price reclaim this 200-day moving average followed by 1878, that would break the series of lower highs and signal a resumption of the uptrend in gold. So let's see if we can get back above this 200-day followed by 1878. That would be the big level to watch for as far as resistance goes. The big level to watch on resistance is $2,089, and once we get above there, I think we'll be off to the races in gold. Turning to silver, silver has held up much better than gold recently, and price is currently trading above a rising 50 and 200-day moving average. That's an uptrend, and we also see this very clear green uptrend line dating back to the March 2020 lows. Now, if for some reason this green uptrend were to fail, then the path of least resistance would be a pullback towards this 200-day moving average. However, I think the more likely scenario is that we continue to move higher, and once 2992 is cleared, followed by last week's 3035 high, that was the high that we printed on the silver squeeze on Monday. Once that level is cleared, I think we'll really be off to the races in silver, and my 2021 price target continues to be $50 on silver. That may sound ridiculous, but gold broke out to new all-time highs in 2020, and it's very common for silver to follow suit and just lag behind. So I'm looking for a test of those previous all-time highs near $50 in silver in 2021. Turning to a junior gold mining ETF that not many people are familiar with. A lot of people are familiar with GDXJ, which is the junior gold mining ETF. However, SPROTT also has a junior gold mining ETF that has outperformed GDXJ, and it holds a much higher quality basket of mining stocks, in my opinion. And it's a really fine way to play the gold and silver bull market. And what we can see here is price sitting right at this strong confluence of support between $41.80 and $42.80. So this could really be an ideal entry point right here. Although, trying to nail bottoms is always risky. There's always the possibility that we go lower, but this looks really attractive to me right here. I always like to, this is probably my favorite chart to show people. And what this chart shows is the commodities sector versus the S&P 500 dating all the way back to 1980. And we measure the commodities with the CRB index versus the S&P 500. And what we can see here is that commodities are just beginning to bounce off of an all-time record low. In other words, commodities have never been so cheap relative to stocks going back nearly 100 years. And whenever you have a ratio that gets this far out of whack, it tends to not only revert to the mean, but overshoot to the upside. And I think you can see this 40-year trend reverse, and we see a major long-term uptrend in commodities where they outperform the stock market as a whole. This is a very powerful chart. So one thing I'd like to start including in these weekly updates is a mining stock of the week. And this week I've highlighted Franco-Nevada. And this is a stock that's really caught my attention this week, as this is a blue chip royalty and streaming company that typically leads. And what's really striking here is that this stock is underperforming most gold miners and the gold mining indexes. And what we see here is price is the most oversold as measured by RSI, that it's been dating all the way back to March of 2020. So this stock is just beaten to a pulp. It's trading below a declining 50 and 200-day moving average, which is in a downtrend. So this is almost a contrarian play to buy Franco-Nevada. But this is one that I am personally bullish on. I don't give personal advice, especially on public channels, but I have provided some trading ideas to our members at Silver Chartist around Franco-Nevada. And this is one that's really interesting and worth keeping an eye on. Turning to uranium, let's first take a look at the spot price for uranium as measured by uranium futures. And what we see here is price is hovering just near this $29 support within the confines of this uptrend channel. And what's really interesting about uranium, and you guys may have heard me say this before, is that nuclear is a growth industry. And in order to incentivize the new production that's going to be needed to fuel these nuclear reactors that are coming online, that uranium price is going to have to rise to at least $50 and probably significantly higher. And currently we're around $29. So we're headed for a supply crunch in uranium, and that spot price is going to have to rise. And that's more of a when question and not so much an if question. And I believe this presents opportunity. Turning to URNM, this is an ETF that tracks a basket of quality uranium mining stocks. And we see that this ETF has nearly doubled in just a couple of months, going back to November of 2020. So it has gotten a little bit overbought in the short term here, and it would be really healthy to see URNM and some of the uranium mining stocks consolidate their gains above their recent breakout levels. So looking at URNM here, what I would look for is some backing and filling above $48.59 prior to a resumption of the uptrend. And once this 61.67 level is cleared again, I think we'll be off to the races once again in the uranium equities. So guys, if you found value in this, please leave a comment in the comment section down below. And I look forward to speaking with you next week. Talk soon.